So corn year to date is up just under 90%. Why am I talking about corn? Is because there is a chart out there that I posted on Twitter at the New America 77. Also, Mike Maloney talked about this on his latest video. He did not go into what I'm about to tell you right now that I was able to put together based on this chart that he showed in the time frame of the big uptick in the parabolic move by many commodities. So corn, but not gold, and this is where I'm getting to. So corn goes from April of last year till about August of last year, kind of flat, a little bit up here and there, then flat, and then August comes, boom, straight up. Copper, straight up. Wheat, steel, you name it, lumber. But gold goes straight down. That was the base. That was basically the top for gold, as it's been consolidating now for over 8 months. So what happened here is the wealth transfer. This is how the big money always destroys, how the Wall Street destroys the retail investors. And I will prove it to you with this fact right here. Gold started to move. Gold sensed this inflation back in late 2015, going into 2016 and on, when nobody was talking about it. I started to talk about it on Parler every single day at the New American Conservative, if you want to take a look, since 2018, when gold was about 13.50, in that range. Silver was about 14 an ounce. So gold moved pretty quickly from that range of 1100 all the way up to about 1800, and this is where Robinhood, this is where stimulus check, this is where retail investors just went in crazy, and then all of a sudden you see premiums on physical and all that starting to go up, right? What happened from that point on? Gold slices through $2,000, to be precise about 2150, I think, and this is where it started to bottom. And that happened in August. Why? Because retail investors got it all wrong. Wall Street started to get out about $1,800 as they realized gold started to hit all mainstream news. When you hear CNBC talk positive about gold, you might want to start thinking of selling. And what I'm talking about is not physical. These people are not selling physical. Those who sell physical, unfortunately, are the ones in trouble who needed quick cash to pay their mortgage, put food on the table because the stimulus check was not coming in. Remember, we had that huge delay in money. So that's unfortunate what happens when people are actually selling physical. We're talking about derivatives. We're talking about digits on the screen. We're talking about paper gold. And this is how, and this is why I like to speculate in it, because you just have to understand the game. So to kind of close off the video with this, gold sensed inflation years ago when everybody was drinking the booming economy Kool-Aid. Once gold went mainstream, the insiders were out and retail investors got caught holding the bag, as they always unfortunately do. So try not to be the bag holder. Try to understand the game, and when you see mainstream news start talking gold up again, you might have an hour, you might have a day, possibly a week, but you better know your exit strategy. And this is what's happening now in so many other sectors, like, of course, cryptocurrencies, S&P 500, you name it. So pay attention to that and understand that gold sensed inflation in late 2015. To close the video off, this is also very important. You gotta have, in my opinion, if you are all exposed into stock market or real estate or whatever, you got to have cash, because in case for whatever reason, Federal Reserve decides to not support these markets any longer, they want to just pull the plug. If we hit this deflationary period, it would be major opportunity to get into blue chip dividend paying stocks, to get them at 50, 60, whatever, possibly even 80% discount. So this is why I believe having cash is important, and we don't even know what's going to happen in the bond market as well. It does not mean when you see, let's say, Dow drop 30%, if Fed does jump in to try to save it again like they did last April, maybe the bond vigilantes, whatever you call them, maybe they decide, you know what, not this time, we're done. And all of a sudden you see the yield start spiking. This is the environment that nobody wants to be in, but it is a possibility. So it's good to have, I believe, cash on the sidelines, physical, hard tangible assets in your possession, and speculating in equities, understanding the game, inflation, deflation, what is going on, and paying attention to the sentiment, paying attention to what mainstream media is talking about, which asset are they building up, and which asset is hated. Take care.